Yo, what's good? Happy New Year and that. You feel me? It's not that no Chinese year or anything like that. This is the financial year, fam. The year of the bag. You feel me? I'm really trying to get to the bag this year. And obviously it being a new financial year, everything to do with tax resets. And so I wanted to give you guys, first of all, a quick recap into stocks and shares ISA. You know, this is a question that I probably get above any other, which is, how ISAs work, generally speaking. So, it's always worth doing a refresher. But if you want more detailed information about tax, if you want more detailed information about the differences between, the basic account and the free trade ISA, or if you want general ISA information to do with cash ISAs, help to buy ISA, JISA, LISA, all of them SARS, then the links will be in the description for these videos that you can see on your screen. I've put the thumbnails there and the links will be in the description. But in today's video, we're going to primarily focus on stocks and shares ISA in the first half, and in the second half of the video, we're going to talk about 3 stocks that I feel you should put on your watch list. Now, I did a poll on the Instagram. It wasn't really a poll, it was a sticker, one of those question sticker thingies where people respond and then you repost it. Did one of them, and lots of people responded with stocks that they're looking at for the last tax year and obviously the new tax year. Now, I decided to choose 3 of those stocks, specifically ones I don't hold. So new ones that I can give you some new value, some new information, and then hopefully you guys can put this on your watch list, and hopefully some of them could be potential purchases for you once you do your own research, and hopefully you get some wealth. So that's the whole purpose of this channel. So we're going to talk about those 3 later on in this video, but let's just do a recap of ISAs. So in terms of the ISA allowance and some of the terms and conditions when it comes to ISAs, you got to be 18 plus. There are a lot of you that have messaged me that are under 18 that are talking about ISAs. I think it's absolutely fantastic that you're thinking about this at that age. Unfortunately, you've got to be 18 plus, but once you're 18 plus, just save your cash is what I always advise you to do. And then once you're 18 plus, definitely jump on getting an ISA. The allowance is £20,000. Now, you would have seen from the previous video on ISAs explained that this is split across your whole ISA situation. So if you've got a cash ISA and if you've got a lifetime ISA, then £20,000 can be distributed among all of those collectively, not £20,000 individually. Now, for the purposes of this video, we're just going to assume that you're not going to put money in a cash ISA because you're going to get 0.00001%. And for whatever reason, you're not going to put money in a LISA, and we're just going to focus on you putting £20,000 all in your stocks and shares ISA. Then you can do that on an annual basis. Now, currently, the new tax year is obviously the 6th of April 21 to the 5th of April 22. Come the 6th of April 22, you can then put another 20,000. So some of you guys have seen my portfolio and seen like me having 50 odd or 60 odd K in my ISA, and you're thinking, wait a minute, you can only put 20K in your ISA. You can do 20K on an annual basis. So just remember that it's not 20K forever. It's 20K each tax year, each financial year. Now, you can open a new ISA each year, or you can add to your existing one. So some of you might have an ISA with Hargreaves Lansdown, then next year you might open another one with AJ Bell, and then so on and so on. What you can do is also pay into the exact same ISA. So if you opened one with Trading 212, come the new tax year, you can just continuously add to the one in Trading 212 if you want to keep all your funds in the same place. That is something that to bear in mind, because different companies and have different benefits and different perks. So, it's just worth sometimes scanning the market and seeing what could be beneficial for you. Me personally, I just like to add to the same ISA because I'm a very simple human being and I just want to build everything in one place. Now, in terms of the benefits for the ISA, there's no capital gains tax, no dividends tax. That's the main benefit. It's a completely tax-free haven whereby anything you make, any profits or any gains you make is not subject to any dividend or capital gains tax outside of your personal allowance. Now, with some brokers, ISAs are free, which is also another benefit. And obviously it depends on the broker you use. The broker that I personally use, Free Trade, for my ISA, I pay £3 on a monthly basis. I don't really want to move it at this current moment. I'm quite happy with it being there, and I like having a mental distinction between some of the brokers that I use. So some of them are more for short-term investments where they're outside of an ISA. Others are for long-term investments, i.e. free trade, which is inside an ISA, which I prefer to just to pay that £3, to be fair. And I think I mentioned in the other video, if you put the whole 20K in £3 a month will work out to be like 0.018%, I think so, or 0.08%, something along those lines. It's not that much overall. What you can also do though is ISA transfers. So an ISA transfer is basically when you've got an ISA and you've decided you want to move the whole ISA into another brokerage firm for whatever reason. Maybe they're cheaper, maybe they've got more stocks, maybe they've got better features, or whatever the reason may be. All brokers have to support this. You would go to your new broker, fill out an ISA transfer form, and then within about 2 to 6 weeks, all of your stocks will be moved from your existing ISA to your new ISA. Now that's quite beneficial because, you know, what you don't really want to be doing if you've been building up your ISA for say 5-10 years is selling and then having to rebuy in a new ISA. You probably won't be able to, depending on how much you've built in your ISA. So if you've gone over 20k, then remember in a new ISA, you could only put 20k in that year. So a good way to get around all of that is just doing an ISA transfer. So if I get to a stage where I've got 100k in my ISA and I want to then open a new ISA with another broker, but I want all of my money from my previous ISA to be in the new broker, then I'll just do an ISA transfer rather than selling and moving. And you know, there are instances where the new broker might not have all of the stocks from your existing. In that instance, you'll just get the money in cash. Now, that is an ISA recap. What we're now going to talk about is 3 stocks to put on your watch list. I probably would have put these stocks in the thumbnail or in the title, to be honest. But let's get into some of this information. Hopefully it's going to be beneficial for you. The first stock to talk about is Palantir. So Palantir is a big data analytics firm. It was founded by Peter Thiel. If you know Peter Thiel, he's got a history of, you know, founding many startups and businesses in Silicon Valley, and he's very, very well respected in the venture capital space as well. Now, in terms of Palantir, though, they have 3 main projects or products. One is called Gotham, one is called Metropolis, and one is called Foundry. Gotham is used for counterterrorism for people at the United States Department of Defense. Metropolis is more about financial data, so it's used by hedge funds, banks, and financial firms. And Foundry is used by a variety of corporate clients that are just looking to get, you know, better data. So that includes people like Airbus, Fiat Chrysler, Morgan Stanley, and I believe the NHS. In fact, one of the things is that there has been a lot of ethical concerns with Palantir. So, you know, if you are an ethical investor, this might be something for you to think about. One of the ethical concerns is, you know, the deal with the NHS was said to actually be illegal. It was done a little bit, you know, under the carpet and all of that. There was a campaign against it to try and actually block the deal. But the campaign was eventually dropped, and the NHS promised that they're going to be transparent with all of their deals and stuff going forward into the future. But, you know, it all came about during the whole Divot 91 situation. So, you know, the whole purpose was about how they can, you know, get data on people, how they're moving about, are they vaccinated, are they not vaccinated, etc., etc. One of the other ethical concerns is all about privacy as well. So you think about it, Palantir is collecting a lot of data on individuals, from your DNA swabs, driving licenses, social media posts. If you watched the Netflix documentary Social Dilemma and you see the man in the room and he's like, oh, okay, you know, he's not engaged on Instagram, so let me just put this out there. So he then opens his app, put this push notification, etc. That's kind of how to look at Palantir. Like, they have so much data on you, so much data on individuals, that they're able to get, you know, a really clear picture of maybe your habits and what you're doing. And then obviously with whatever partnerships they've got with these businesses, then they use it, you know, for their own commercial gain at some stage in the future. When we talk about commodities, we always talk about oil, we talk about gas, we talk about corn, we talk about maize, we talk about gold, Bitcoin. Listen, man, the biggest commodity right now is your data. That is definitely the biggest commodity. That is where the most money is being made. And obviously Palantir is definitely in the middle of all of that. And obviously there's been other concerns as well. So they actually came up during the whole Iraq-Afghanistan war. And so there's been a lot of ethical concerns about Palantir having blood on their hands. Even more recently, they're involved in, you know, the deportation of immigrants and, you know, a whole bunch of stuff. Because obviously it's a government-used tool. You can only imagine what the US government is getting down to. Do you know what I mean? They're probably tracking this video right here. I mean, they're probably 100% definitely tracking it. So listen, this is the situation with Palantir. However, when we want to talk about the business and we want to talk from a more quantitative perspective, they've got a very experienced management team, which I think is obviously something to definitely look for when you're trying to buy something in an ISA and hold it for potentially a long term. You want to make sure that they've got a good track record. They've got 67.1% forecasted earnings growth, which is a great amount of earnings growth in the future. So if that was over, the next 5 years, you're talking about what, 300%, something odd percent growth in your portfolio over the long term. And all of these investments I'm talking about are long-term investments. So, I'm talking about holding these stocks for 3 years, for 5 years, for 7 years, for 10 years, etc., etc. They've got a 13% debt to equity ratio. So their balance sheet is really good. Not a lot of debt, a lot more equity. And recently they've just done a 5-year, 89.9 million government deal. And I think that was with, a nuclear department of the nuclear arm of the government, or something to do with nuclear weapons or whatever it might be. But I think the essence here is that they're going to be continuously doing deals, and obviously the more deals that they get, the more people they're able to license their platform to. That is obviously going to have a lot of growth in the future. And one of the things I like about Palantir is just that their consumer is obviously businesses. And I've said this to you before on many occasions when I held Okta, and when I held a few other firms, Shopify, and maybe not Shopify actually, but a few other ones that I like business to business businesses. I think sometimes because of the way their models are set up and the how entrenched businesses get with these tools, it can be very, very beneficial. Anyway, we talked about Palantir enough. The next stock to talk about is Salesforce. Listen, Salesforce is a CRM software. The CEO is called Mark Benioff. He's famously wanted to sell Salesforce to Microsoft in 1999, but now you can actually see them as a Microsoft competitor. Microsoft have a platform called Microsoft Dynamics. Salesforce have Salesforce, and it's all about CRM, client relationship management, and it's obviously a software as a service tool which companies can license to manage their portfolio of customers, clients, etc. Now, one thing that Salesforce did recently, which you might have remembered, in 2020s, they acquired Slack for 27.7 billion, which is obviously a very, very significant acquisition. Again, competing with Microsoft, who have Microsoft Teams. And I personally think that Salesforce is, I don't want to say the word perfect, but I think it's one of the as perfect as you can get from an ISA perspective. I've tried to, as much as possible, learn from all of my personal mistakes, the types of stocks I've put in my ISA, the type of, longevity I've had in certain positions, how I've thought about certain positions, how hasty I might have been. And my mentality now is just to definitely really be specific on when I buy something, I'm buying it for the long term, irrespective of what happens. Unless something absolutely crazy happens, it's just purely a long-term play. And so with that in mind, safer, good growth stocks come to play, ones you can trust for the long term. And I think Salesforce is definitely that. You can see 58.8% annual gain over the last 5 years. So from 2021 to 2016, 58.8% annual growth, which I think is fantastic. They've got a lower PE ratio than the US software industry. So among their peers, they're considered to actually be cheaper and more undervalued. And you can just imagine who some of their peers might be within that sector as well. They've got extremely strong balance sheet, literally no debt, and obviously a hell of a lot of equity as well. And they've got consistent annual revenue growth. So when you're looking at the historic earnings, you're seeing consistently quarter on quarter, year on year, they're just growing. Their subscriptions are growing, their revenues are growing. They're just continuously doing better and better and better. And so I just think this is an extremely safe play, extremely good play. As I mentioned, I don't hold none of these stocks. I'm just trying to give you information on stocks that I don't hold and my genuine thoughts on ones that I think are good. And Salesforce definitely hits that. So yeah, that is the second one. And the third one is, I thought to do a little song like boom, Teladoc. Teladoc is the third stock that we're going to be talking about today. Teladoc is a telemedicine and virtual care company. They've got different parts of their business and they offer different services, from telehealth, which is like telephone and video conferencing software where you can just talk to your GP on Zoom or whatever, not really Zoom, their own platform, tell them you got a flu and they just tell you what to do. and give you a prescription online, and then you just go get your ting, and then you just pattern it, and then you're just good. You feel me? The next thing they do is like medical opinions. If you want to get, sometimes second or third or fourth opinions on certain situations that's going on with you, and you've got a variety of GPs, a variety of physicians that you can actually go to, which I think is extremely powerful in a post-pandemic era as well. I think is extremely important, where people are paying a lot more close attention to their health and their well-being. The platforms like Teladoc, I think, is just going to continuously surge and rise in the future. They have a great platform which includes things like AI and analytics, and what they do, they license it to corporations as well, and so they might license it to different doctors or different hospitals, etc., etc. Now they're in 130 countries worldwide. They've got 27 million members that they've served. Members would be people like me and you. They basically make their money through subscription fees to insurers. So in most countries, obviously, most of the people watching this are in the UK, where you've got the blessed thing called the NHS. But in most countries, there ain't no such thing as free healthcare. There's no national health service. You got to have insurance, or your leg's done. If you if you hurt your leg and you ain't got insurance, you're done. You feel me? You got to have the money up, or just start limping for the rest of your life. It's literally that real in pretty much 99% of countries. So the last time you walked into the NHS and you walked out and you started cussing, just remember it's free healthcare. And it's a benefit. Now, in other countries, most insurers, what they do, they will pay for different solutions for their people, their clients, people like me and you that might pay for the insurance policy. So that's how they make their money, through insurers typically, who cover their members. But also they do pay as you go, direct to consumer as well. So if you didn't have insurance and you wanted to pay as you go on an ad hoc basis, then you could basically go, and I would assume it's comparably cheaper than going to a doctor in a country where you have to actually pay for each and every consultation as well. Now, if you look at the earnings, it's been great. Teladoc's actually been going for a very, very long time. Their earnings have been really, really good. What you will notice is their revenues have been solidly going up, but their net income in their last quarter for 2020 had a massive, massive drop. But that was actually directly due to an acquisition of Livongo. So they've been acquiring businesses along the way as well, which I think is great to see. So, they're just naturally growing as an organization. They're acquiring smaller businesses. They're shoring up their balance sheet. They're diversifying their portfolio, they're increasing their client base, and they're improving their technology. And I think, Teladoc is definitely something to watch going forward into the future. Now, let's get into some of the numbers. They're currently 37% off their all-time high. So if you're looking at their all-time high, I think it was around 280, sitting at about 180 at the time when we're recording this right now. It's about 37% off. So I think it's actually at a very, very good discount. So if you're thinking of an entry point and you haven't got this, now could be a decent time, or it might just be worth monitoring it and seeing, where it goes to. They are expected to have 60.8% future growth over the next 5 years on an annual basis. So again, you're probably looking at about 300+% growth in a 5-year period. And this is based on 27 analysts. So it's quite a solid and substantiated number. It's quite statistically significant. And from there, you can make the case that actually there's solid growth prospects with this business. Now, they're also forecasted profitability within 3 years. I always like to buy businesses. Cloudflare is one of them. Shopify is another one. Okta's been another one. I like buying businesses that are on the cusp of profitability, but they're not quite profitable yet. It does increase the risk, but it hopefully gives me the opportunity to get in at a decent price. And when they do turn profitable, what you've seen historically is the share price, does a mezzanine. So, that's the time when I personally like to get in a little bit. And I think that's quite a good selling point for Teladoc, that you can think, if you are thinking long term and you're not going to be worrying and bitching and crying about all of the different ups and downs every single week, every single day, every single month. If you're just going to add to it and think long term and just hold it for 3+ years, then I definitely think it's going to pay off for you. If you want another catalyst as well, I'm going to throw in another one. Some of you may already know that this is a stock, one of the biggest holdings in ARK's portfolio as well. So this stock is in their ARK K fund, ARK F fund, ARK W fund, and ARK G fund as well. So, ARK, Kathy, the whole gang, they definitely feel Teladoc. They're definitely bullish on Teladoc. And, could be a good reason why you might be bullish to this stock as well. Listen, definitely do your own research. You know, these aren't recommendations per se, but I definitely wanted just to give you some value to kickstart the new financial year, and hopefully some of these stocks, you know, become beneficial for you if you do decide to take it up. But I would highly encourage you to do your own research. You know, I've only glossed over some of the key pertinent information, but I haven't gone into, you know, the depths of detail that I personally would go into before making an investment myself. So I definitely recommend you going into more detail. But hopefully you found this video useful. If you did, please hit that like button. Please hit the subscribe button if you're new, and I will catch you soon with another investment video. Pre-market. I'm out.